And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to the Coach's Playbook. It's Tuesday, March 7th. I'm back. It's been a couple weeks. I think everything went smoothly, right?
We did well last week. Hogue, myself, and Michael had ourselves a day.
It's always a day when you got MP in there. Well, today we are talking about the age-old question: to scale or not to scale. Are you all in or are you scaling in? Same with the outs. We'll get to all that. But first, Mick, you have a trader shout out for us?
I do. Big shout out to my guy, Daryl Rickelson, up 5,300 trading the equities today.
Good show, Daryl. Okay, let's get down to the brass tacks here. I know this is a contentious issue among some, but we're attempting to answer today. When you're putting on a trade, it's a retail trader specifically, when you're, maybe trading a couple contracts, what do you do when it gets to your level? Do you put your full position size on right away and take it off at the same? Oh, we already got some head waving. And I know that some might feel a little bit differently. I want to start today before I get to my eccentricities. Hogue, you're making trades. How do you do it?
The majority of the time, I'm all in, mostly out. Once in a while, I'll leave something kind of flying in the wind just to see if I, can get some continuation on a move. But the majority of the time, I'm all in. I'm all in, all out. Occasionally, if the situation is right, I mean, I'll accumulate an inventory in a zone. But is that just another name for adding to a losing position?
I would say absolutely not.
I tend to agree with Dan. Well, Dan, why don't you give it your thesis real quick? We're going to be going around a bunch here.
Yeah, I mean, to me, John, you talk about, is that just adding to a loser? I would say absolutely not, because like you said, it's a zone. And I've heard you say it about 12 million times. Levels are not a finite level. It is an area.
That is true.
For me, as I start to approach that area, that's where I'm starting to look in, because I want to get part of my position on. I trade in what are units, and my units are based off of how many contracts I'm trading. Everything's different. So as I start to approach, I'm usually looking to put on between a half and a quarter unit. And as that market continues, maybe goes against, hey, I'm okay continuing to load into that position as long as it hasn't, state hasn't changed and my rules are still met and my stipulations and everything that's required is still looking good. I can add to that position without saying I'm adding to a loser. Rather, I'm continuing to build a position in a zone that I like. My reason for that is, as I start to enter, I want to make sure I'm in a trade, because typically if I'm starting to make a trade, it's not like I'm making 25 of these a day. Sometimes I'm not even getting one trade a day.
Right.
I'm looking for an opportunity to make sure I'm in a position, because I really do have a lot of faith and belief in the system I've developed when it comes to determining levels. And that's when I get in. So that to me is how I'm going to do this. I am going to scale, but I'm going to scale based off of a system and a strategy I've defined.
Well, similar to first degree murder, it all comes down to intent. So I think that you both can be right there, but basically it's the difference between, here's what I mean by intent. If you go into it saying that I am going to accumulate throughout the zone at some set interval, that is your intent. If you put on what was supposed to be your full size and then say, well, it's a zone, I'm going to continue to accumulate, that is reckless risk management, is how I would put that there. I'll give
that's
my
adding
thoughts.
To a loser.
Yeah, that's adding to a loser. And it's easy if you don't have a risk manager or an accountability partner, it's really easy to trick your mind into thinking like changing strategies, changing your outlook midway through a trade. You might even be able to fool yourself into thinking, oh, this whole time I was just accumulating here. This is what I meant to do. But you got to be able to trust yourself. I'll go to Mick first before I give my spiel.
Thanks, Jack. Well, I mean, I agree with everything Dan and John have been saying, and you too, Jack. I mean, I think for me that all in or all out, it's situationally based. I do think you need to separate, a retail trader trading on a short time frame versus someone who might be position trading. Like Dan, I like to use unit sizing, whether it's, a quarter unit or a half unit. I found myself over the years and even now, it all depends. It's situationally based. I see nothing wrong with going in and going all out on a trading on a short time frame. You can go all in and peel some things off if you want to scale some orders. Higher time frame stuff, I don't think it's, the greatest time to go all in or all out, because if you are on a higher time frame, you're looking for a bigger directional move. And you don't want to initiate a trade with your full unit sizing. And really quickly, unit sizing, I mean, you could call your unit sizing one contract. That might be one unit for you. It might be 10 contracts. It might be 100 contracts for another trader. But with the unit sizing, or excuse me, with the higher time frame stuff, I don't like to go all in, because I might have a higher time frame trade idea on crude oil, and zones were brought up earlier. We're trading around $79 right now. I might like going long crude oil between $79 and $75. That's a 400 tick range, a $4 range. It's $4,000. If it goes against me, the upper end of my range that I like to the lower end, it's $4,000 on a one lot. Don't really want to take 400 ticks heat on your full boatload. But if you are looking to make, $10, $16 or 1,600 ticks on the trade, you might not really, be worried too much about, something moving against your 400 ticks. But so again, situationally based. There's nothing wrong if you're an all in, all out trader. Also though, to, go all in on your full unit sizing and then peel off. If if the market goes in your favor and goes to your zone, but the way you're monitoring the market, you think that it could give some more, what's wrong with taking half of your risk off the table and then, leaving a runner on, with a protective stop to see if you can get some more out of that market, if you're seeing that market could be giving you more. So it's really, I think, for me, situationally based, and then, based on your personal preferences, and, everybody's different. What are you comfortable with? Try it all. You don't have to, be all in, all out at one time, and you don't have to scale all in, all out at one time. That's kind of my stance.
So back when I was power fading, I think I described this before, is we kind of divide things, I would, roughly into thirds. It wasn't always exact, but we would call it, if you had your level, it was a third you'd be aggressive, a third you'd be on the level, and a third you'd be a little more defensive. So that you do something like that, you average to what your level was, assuming you get all of it. And, the benefit is naturally that if you get the aggressive stuff and it works out in your favor, you get a little bit out of it. Now, the downside is, none of these are perfect, and that's why it has to be part of your strategy, is that it can, you are, in a way, like if you do have a level, and I know it's a zone, you are kind of adding to a loser, especially if it's at the bottom of your zone. You maybe add an extra contract right as it's blowing through your zone, or on the getting out, you end up staying in trades much longer that might get you into all sorts of other tomfoolery. So Mick's right in that it's completely situational. If you have the ability to do it, I think that for me, it makes sense to scale positions, especially if you're fading, right? If you're doing some sort of range bound market, I like that more. Dan, do you have any thoughts on that? Are there any different market states where you're not scaling?
Yeah, I mean, obviously, like anything, every trade is situationally based. I think for me, my strategy really has evolved over time into being long term, and scaling is very comfortable for me. But also, you have to look at it from a different perspective too, right? If you're a new trader, or you're trading smaller, you don't have size to trade, and you're looking at 15-minute charts, and your trade durations are an hour or less. Yeah, all in, all out, pretty reasonable there. That's, for me, what I have found is not what I'm looking for in my daily trading activity. I'm looking much longer term these days. I mean, I hardly am looking underneath an hour chart for my short time frame stuff. And so that's where my scaling, and again, it's not that I need to ensure things are comfortable before I'm willing to take a trade. And now, if I go in on a quarter unit as the market approaches my zone, if I start to watch order flow coming in a little bit more aggressive, and I start to see volume increasing as the market's going against my position, just because I'm still in the zone does not mean I'm going to continue to leverage into that trade. If I'm seeing basic principles of volume, if volume is increasing and market's moving in a direction, look for direction to continue. The last thing I'm going to do is add to that trade. I'm going to continue to monitor that volume. I'm going to continue to monitor that order flow. If I see things start to come back in my favor, absolutely can add into that position. So it doesn't mean you have to 100% get to your full position sizing that you intend to trade. Same thing on the flip side, right? I have a hard time. I look at some of our traders, and, as they approach daily loss limits, I'm seeing these on the boards. I'm seeing traders down money, a couple $100 from their daily loss limit, and to see 3 lots go on in the NASDAQ or 5 lots go on in the NASDAQ as they're down. My question is, what is your thought process when it comes to position sizing there? Obviously, you're thinking, I got to get the win. I got to get back. And those are really where we've talked about this a million times. That's where that switch has to flip. If you're going to trade one lot, maybe bring it down to micros. So again, every single thing is situationally based. Position, what the market's doing, market state, P&L. We talk about it a lot. Like, don't let your P&L influence your decision. But if you're down money, size down. Don't push yourself. Just try and make yourself a little bit better on that next trade if you can maintain that emotional state. But if you can't, you probably shouldn't be trading.
Well,
I just touched on 12
Yeah.
different things. I don't know if I answered your question, but
No,
I don't know.
that's
That's through my
completely
head.
if
I don't know
I
about
may,
you put my dog to sleep, Dan.
Mine's snoring too over there on the couch.
if I may, I think anybody who's, found success in this business would say, it's much better to trade smaller than you can, which kind of plays into this unit sizing word that we've been using here today. I personally am more comfortable trading smaller than I can. It also allows me the ability to, when the market's telling me that I am right and the position's going in my favor, I can get aggressive with adding if I'd like to, the point where maybe if I start off with a quarter unit size or a half unit size, then I'm getting a full unit size, and unit sizing is different for everybody. Like I was mentioning, it could be 110 or 100. You can add, then if you start off with a half a unit, you might, as it's working in your favor, you might find yourself with a full unit on. If you get further conviction and you're feeling better about this trade, you can slap another full unit on. With that whole scaling thing, though, I do want to talk about, there's this thing called pyramiding or reverse pyramiding, and it pertains to going all in, all out. If my unit sizing is 10 contracts, I kind of want to put my 10 on initially, and as it goes in my favor, add smaller size as it's going in my favor. Basically, that keeps my average position at a good price level, where I'm not starting out with 10 contracts and it moves in my favor, and then I go buy 40 contracts. Now I've just brought my average price up. I have, a much bigger position on. I'm going to take some, I'm going to be sweating a little bit if that market goes back to where I initially put that 10 contracts on. So we never really want to be reverse pyramiding if we are scaling in and scaling out. We want to be pyramiding, which is start with your bigger size, and as it's working in your favor, you add smaller increments along the way.
Yeah, that's interesting. We often talk about not kind of doubling down on losing trades. I guess the reason we haven't talked about too much on tripling on winning trades is because I don't see that happen too often. Someone else could tell me wrong here, but it ends up kind of being just as bad. You're putting yourself in a position where if it goes a little bit against you, you're kind of out of luck. So
yeah, something going from looking good to, still your directional bias was correct. But if it goes against you and you slap on bigger size as it's moved, now you're in a losing trade and you are correct about the direction, which is a stupid place to be.
It is. It's always, of course, situational. Like last Friday in the S&Ps, if you were long, the market gave you opportunities to leverage into that long. I'm not, let's say you're long one, you find a spot to put another one on, and the market continues to go your way. It's not always scaling against you. Sometimes you got to scale in to leverage into a position that offers a bigger opportunity. Last Friday, I was pretty confident we were going from low to high last Friday, and it's exactly what happened. So, if I had the opportunity to leverage into a long early on in that session, it just would have increased profits potentially exponentially. But so scaling is not always when it goes against you. There's opportunities to scale when it goes your way too. Mick, I was just thinking that when you started talking about that, and it's important to remember that as well.
Now, when you do something like that, when you're scaling into something long, are you then scaling out the stops, or is that too cute? I'm thinking so say that you had let me make the numbers easy, like a 20-point profit target on your initial size, and you had a 5-point stop loss, and it's going in your favor. You see some sort of pullback, you add to the position. Do you just add another unit with similar profit target, and a lot, like if it goes 5 against you, are you then taking that one off?
All of these excellent questions. And again, it's so situational. It's hard to put a finger on one way to do it. Honestly, I've been trying to add to winning positions my entire career. I've had some good ones, but I've had some bad ones come back and take me out, at basically break even, because you're adding to a winning position, but you're increasing your average trade size, your average entry point, right? So does that change the risk on the trade at all?
I think it does. And I would just add to that too. Not only are you changing your entry price, so as the market goes against you, you can still be in a great position. Your definition on levels can be great, but you're starting to take a lot more heat as it approaches that initial level. But because you've averaged in, your entry price is now much higher. What's that emotion? It creates a major emotional change. Also, the one thing I would add to this too, right? As you scale into a winning position, you got to keep in mind, what's your time frame of a trader are you? Because it gets tough. If you're thinking shorter time frame, if you're thinking sub an hour, it's kind of hard to scale into that trade and get the profits that you should. At that point, maybe it is that all in, all out. So I think there's a lot when it comes to these things. Everything really is situationally based. And I would just add to that, it's just understand how you're going to emotionally react. Because when you increase size, which is basically everything we've talked about here, as you increase size, there's a lot more emotion becomes involved.
Mm-hmm.
Holding on to a position all day like you could have on Friday is exhausting.
Yes.
It is exhausting.
The best outright trader I ever saw in action, it's a mindset you have to acquire, that I would watch this guy. If you're really someone that's going to add and hold the winners, you often have to be okay with knowing whatever unrealized P&L, but it's only unrealized in the sense that you haven't ended it. It's not like it's an illiquid market. You could get out there. You have to be very comfortable with the idea that I am not going to leave this trade at my peak where I could have got out, because the only way to hold for that long, do you guys understand what I'm saying? Like that, things can theoretically run. If you're in an outright trade, those things can run a long time in one direction, much longer than the vast majority of traders would feel comfortable holding them. And instead of just trying to get out when your P&L is as high as you think it is, it could always get better. But to take that sort of risk, you have to be comfortable with, like, okay, when it, kind of like trailing stops, when it pulls back at some point, that's where I'm going to be happy. But the only way you get to that number is by watching it go so far in your favor. And that was something that I particularly was never really able to do.
It's an uncomfortable feeling.
Very uncomfortable, because you'd be sitting next to someone like that and seeing the P&L monitor, like, holy shit, you're up X amount of money. You just want to like run over and hit L on their keyboard or something. But they only got there because you would have sold 3 hours ago.
Right. And you bringing this up makes me think too, if we talked about a difference between, or I spoke about a difference between, shorter time frame and higher time frame. I mean, higher time frame can mean different things to different people. Are we talking higher time frame for a day, or higher time frame like holding a trade for 4 months, which is, something that a lot of participants, or not a lot, but participants are doing? If you're holding a trade for 4 months, chances are you're not all out when you're getting out of that trade. You're scaling out as it's going in your favor. You might be getting stopped out on certain pullbacks or something. You might be, adding a little bit on certain pullbacks. You have at that point, if you're trading large enough size, you have your core position in the direction you want it to go. But that doesn't mean you can't scalp around a little bit. I hate saying scalp, but on a big up day, if you're long, sell a couple contracts. And if we have a couple days where it's a pullback, you can put those contracts back on. You're maintaining this core position that you have.
Well put. I think in 2023, we'll figure out we'll have like a conference like at the Vatican, and we'll decide a new word for scalp, because I find it kind of annoying also.
A lot of people I found out don't like to use that word for what I mean for short time frame trading.
It's kind of gross. You know what I mean? Like, if you think about the origin of it and stuff like that, it's a little bit like, I don't know. There's probably a better word to be used somewhere along the line.
To everyone, it means something different. When I first was introduced to the term scalping, what we did was trade a 10 lot in the bonds, and we try and make a handle. And we may have sat in that trade for an entire day. And that, to me, was my education on scalping. So when it came to the retail side and hearing people, it's a whole different definition. It's tough, because it means so many different things.
Yeah, and you could even argue, I wouldn't agree with this argument, but I could see people making the argument, someone who's a market maker trading maybe calendar spreads, like they're looking to either scratch a trade or make a single tick on as many contracts as they can. Some people might say that's scalping because they're only looking for a tick, when in reality, they're market making. They might only be getting a tick, but I wouldn't call that scalping.
Good point. Well, do we have any final thoughts here on the all-in versus? This will come up again in other playbooks, I'm sure, because this is a topic that's big in your entries. So don't see anything there.
Well, I'm looking forward to the conference at the Vatican where we can come up with a new word.
Oh yeah, yeah, we're gonna have it at the actual Vatican, Hogue.
Of course, yes.
Not our office. Yeah, there's no internet there right now, but I assume they have great wireless internet at the Vatican. So only the best. So Dan, do you have a quote to sum us up today?
I do. Probably from a guy so many people have heard, Paul Tudor Jones. I think this is a pretty good one. Every day I assume every position I have is wrong.
Good point. And then when he does, I mentioned this once a year. If you can find a copy of what's it called, Trader, on YouTube or somewhere on the internet. I think it got scrubbed from PBS. It's the Paul Tudor Jones documentary. Some fantabulous stuff in there. At one point, he's wearing a pair of Bruce Willis's gym shoes that he bought as good luck. So if you have something like that, I don't know, if you have Chris Hemsworth shoes, maybe you can add some more winners. All good ideas out there. No bad ideas.
Mhm.
Hogue, why don't you take us home?
All right. Well, just some kind of thoughts about position sizing and scalping in and scalping out of positions. And just remember, man, there's no right or wrong way to do it. Nobody knows 100% what's going to happen. So as you continue your path, your journey in trading, there's going to be opportunities for you to learn a lot about it. Some of it's going to go well, some of it's not. And enjoy the journey. And I don't know what else to say.
Yeah, that's a fine. Yeah, I don't know what to say either. So when in doubt of what to say next, it's time to end the show. We'll be
Say
there.
goodbye.
Yeah, we'll say goodbye. We'll see you next Tuesday, everyone. Trade safe. Be good. We'll see you then. Goodbye.
See you, everybody.